Morgan Stanley just made a quiet move behind the scenes. We'll reveal what they did and what it means for the crypto industry. And the US dollar is showing signs of weakness. And the data we've uncovered may change how you look at cash forever. And gold and silver have had their day. But there's another metal surging under the radar. We'll tell you what it is and why insiders are loading up now. And finally, Powell has spoken. The Fed's latest FOMC decision and how it could ripple through all asset classes. All of this and more on Around the Block, the crypto news show that keeps you up to date so you can have an edge in the market. And of course, as always, this is not financial advice, it's for education purposes only. All right, let's jump in. Out of nowhere, Morgan Stanley, the traditional finance giant, has hired a head of digital asset strategy. This shows their hand. They are getting into the crypto game along with every other institution and big bank. Let's listen in to what they say and why they did this.
TradFi is getting more into crypto?
I do think that this is a step forward, at least for Morgan Stanley. All of the banks have started to come out publicly and express their path forward as it relates to exposing their clients to crypto, whether that's trading, custody. There's various flavors and really levels to which these banks have either dug deep or are just starting. I would say that Morgan Stanley is kind of on the more just starting camp. You have firms that have been in this space for a while. JP Morgan is a little bit further down the road. They have announced their own efforts with regards to working with Coinbase. But with today's announcement, it's really Morgan Stanley's commitment to furthering their efforts as it relates to crypto.
They're now admitting freely that traditional finance is jumping in with both feet into crypto. Some banks and financial institutions are obviously ahead, but the rest of them are trying to catch up. Morgan Stanley deciding to hire Amy Oldenburg as the incoming head of digital asset strategy. You do not hire someone for a position like this unless you're deciding to go deeper and deeper into the world of crypto. Slowly, then all at once. That is how a revolution happens. Now we have to talk about the US dollar. It is absolutely crashing down nearly 10% in the last year. That is your purchasing power, your economic energy bleeding in real time. I firmly believe this is one of the reasons scarce assets like gold and silver are rallying, and I think Bitcoin will be next at some point. You can see on this chart the last time the dollar index broke below 96, Bitcoin rallied 500%, and right now we're at 96.3. This chart gives another illustration of what happens when the dollar goes down in value compared to Bitcoin's price. Now, previously, you had a lot of critics in the crypto and Bitcoin space talking about the purchasing power of the US dollar declining, but not many people in traditional finance. Well, all that has changed. I believe it's because we've reached a point where it's so easy to notice the inflation. You feel it when you go to the grocery store. You feel it when you're going to buy a house. Now, billionaire Ron Barron says it perfectly. I want to let you hear exactly what he says, because I think he describes the problem in perfect detail.
What happens is the value of your money falls 4 or 5% a year. That's inflation. Falls 4 or 5% a year, and the economic growth has been about 2% a year. So it's about 7% a year growth, and that means everything doubles in 10 years. The value of your money falls in half every 15 years. So you got to make twice what you're making today in 15 years to stay even. And so stock market, so Bitcoin's been amazing, obviously.
He just said the quiet part out loud. You need to make double what you make now in the next 15 years to be even. That is how quickly the purchasing power is declining in this country. He even goes on to say how well Bitcoin has done over this time period when we have experienced significant inflation. Now, sure, Bitcoin is down on the short term, but if you look over the past 5 or 10 years, it has done phenomenally well. And with TradFi getting on board, I think it's just a matter of time until we see this next leg up. And if you're enjoying this content and you see yourself as a financial innovator, someone who's ahead of the curve, then I invite you to check out our Blockchain Boardroom Alpha Hub. We provide exclusive content, training, and even trade alerts so you can have an edge in the marketplace. If you're interested, just scroll down the description of this video and you can sign up right away. And for a limited time, it's literally 90% off. All right, let's get back to the video. Now, everyone knows that gold and silver are having some of the best runs of their entire existence. And of course, that's leading people to look at what could come next. And we're starting to get a lot of information that copper might be the next metal that will have a parabolic move. Copper has a ton of global demand because it's actually used in quite a bit of manufacturing. We're officially in a shortage, And this post goes on to describe how this will worsen to a deficit of 10 million tons by 2040. TradFi investors and billionaires alike are coming out to say this out loud, that they believe that copper could be the best investment of 2026. I'm wondering your thoughts. Do you agree? Let me know in the comments if you think copper is the next big thing. This chart goes to show that by 2030, the demand for copper will far outpace the supply of copper. Now, while copper could be the next big strategic commodity hedge against inflation, I still believe that on a long enough time horizon, Bitcoin will prove to be the ultimate hedge against inflation. It's used in so many forms of manufacturing to make a variety of things we need every day. So this is definitely one to put on your radar and watch closely. And in a huge surprise, the Fed cuts rates by a full point. Just kidding, that obviously didn't happen. The Fed decided to keep rates the same. This surprised literally no one because we had a nearly 98% chance of a rate pause during this FOMC meeting. I think the bigger news is what Trump is saying about the next Fed chair. He wants to put in someone that will slash interest rates down to zero. So the million-dollar question is, who will Trump nominate next? Now, Polymarket has been all over the map with this as they're trying to track the latest news to get an idea of what's going to happen. You can see back in October, we were really neck and neck between a number of candidates. Over time, that has changed drastically, with at one point, Kevin Hassett being an 85% chance to be named the next Fed chair. But that all changed recently. Now, the current projection is that Rick Rieder will become the next Fed chair, and he has publicly said he wants to slash interest rates big time. Only time will tell who the next Fed chair is and what they do. Remember, they are not the be-all to end-all decision maker. There's a panel of people that decide this, and they have to decide it based on economic data. Now, I do think that Trump will have influence here because he's putting the person in power, and they are going to feel some debt of gratitude to him. Now, one school of thought is that interest rates dropping will be great for crypto and risk assets. Generally, lower interest rates mean people take on more risk. But on the other side, there are plenty of critics that rightfully say that cutting interest rates can lead to higher inflation. Only time will tell what actually happens, but it's great to keep your finger on the pulse here. I hope you've enjoyed this episode of Around the Block. If you want to get that extra edge, don't forget to check out the Blockchain Boardroom Alpha Hub in the description of this video. And even if not, don't forget to like and subscribe so you can stay up to date and ahead of the market.